could use an app, but this, it's effortless. Pocket does things no other app can do. Inside, it has a contact mic. So when I snap it to the back of my phone, it can listen to both sides of a call. No speakerphone needed.
You dream in stars and dive into the deep, fixing the world while the rest of us sleep. Your heart set on giving, no matter the strain, building your legacy through love and brain. Julie knows that fire in your soul, the kind that lifts the broken whole. James, you reach the skies, no one dares. In your hands, the future's caught unawares. Got to know what the hell were you thinking? You laugh as the eye keeps the daylight blinking. Every day's a quest, not some disguise. With James in the storm, the dream never dies. Retired, you say, with a wink and a grin, but the podcast is rolling, pulling us in. Your compass is love, with your kids as your guide. Shining seas wide, like vision and pride. Julie's here, holds your spark. Dreamer who lights up the dark. James, you reach the sky, no one dares. In your hands, the future's gone unnoticed. That's another what the hell were you thinking? You laugh as the eye keeps the daylight blinking. Every day's a quest, not some disguise. With James in the storm, the dream never dies. Tether leads to flying high. You kiss the stars, but never say goodbye. Not even gravity can pull you down. You're the wide awake crowd. James, you reach the skies, no one dares. In your hands, the future's gone unnoticed. That's another what the hell were you thinking? You laugh as the eye keeps the daylight blinking. Every day's a quest, not some disguise. With James in the storm, the dream never dies. Fixing the world while the rest of us sleep. Your heart set on giving, no matter the strain, building your legacy through love and brain. Julie knows that fire in your soul, the kind that lifts the broken whole. James, you reach the sky, no one dares. In your hands, the future's gone unnoticed. That's another what the hell were you thinking? You laugh as the eye keeps the daylight blinking. Every day's a quest, not some disguise. With James in the storm, the dream never dies. Retired, you say, with a wink and a grin, but the podcast is rolling, pulling us in.
Ready to roll, ready to
Your
roll.
compass is love,
Mr. Nick, what's going on, Mr. Nick?
shining seas wide, with vision and pride. Julie's here, holds your spark. Dreamer who lights up the dark.
love it. Right there is where we want. Okay, that works. That's it. And bring this one over to there. We are good to go. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Looking for a simple, safe, predictable, consistent 1% per week. Now, the strategy I'm about to give to you tonight, who sings your closing song? Actually, that was written specifically for me. I like that song. Elham, what's going on? Send me a text, and then I'll send you who sang it, because I have to look it up. Sorry, but thank you anyway. All right, so that being it, you guys are going to give me suggestions of the stocks that you like. But let me tell you what I'm looking for first. Maybe you'll get rid of some of the bumps and bruises we get along the way. Number one, I'm looking for companies that are consistently profitable. Now, when I say consistently profitable, personally, I would like 2 decades. 2 decades is 20 years. Stock market's been around for 400 years. I would really like companies. Yes, Wally World is more than 20 years of increased profits. Yeah, profit. How long have you been doing this? Well, I've been sharing for about 3 years, but I've been investing for over 30 years. 30. But I've only been sharing live doing this. But here's the thing. I have been sharing online through blog posts, videos, podcasts, stuff like that for over 15 years. I think my first video I uploaded was in 2011, I think it was. May have been. Who knows? Who knows? Long time ago. AZ Justin. Just Justin. All right, Justin. How you doing today? All right. That being said, Caden, how you doing? Nick, what's going on? Let's say hi to everybody else in the house. Sonia, good evening, Sonia. Roman, nice to see you. Justin, nice to see you. Caden, who do we have over here? Over here, we have Eric Coney, John Didier, Salvatore, Muslim Gamer. Okay, Johnny Arts. Uh-oh. Oh, right up my spine. That was a good one. Johnny Arts, Lisa G, Joe Schmo, Garrett, Pep Solstice. Okay, that works. Rebecca, Taylor, John Melvin. Good evening. Take it here, sweet Den. Found by Heidi. Hello, Heidi. Be the Lion. Matthew Love. Aaron, who sings the song. Yeah, you have to send me a DM on that. I have to do some digging to find out who actually sang it. James, nice to see you. Eminem, how you doing? Chad. Ariel's in the house. Joe Schmo. Hot Tamale, thank you. Take a Walmart. First one on the list today. Oh, wait, whoa. We're going to take a look at Hewlett Packard first, then we'll take a look at Wally World. Let me write Wally World down. All right, we'll look at Wally World also. How long I've been doing this? Dev, I've actually been investing for over 30 years. I've been sharing for over 20 years. And live with TikTok for about 3 years. Len, busy. Google, really? I'll take a look at it for you, but you're not going to like what I find. All right, Google. All right, let me keep on saying hi. Ooh, Farmer Dan, Illinois Toolworks, ITW, nice. 50 years of increased profits. Gotta love that one. Got it. Ariel, thank you. All righty. Aloha now. Good evening to you too. Top W. Okay. VG. No. Ooh, GLW. Corning. GLW. We'll take a look at that one. VG. I have no idea what VG is. Very good. That's what VG is. Very good. SPYM. Oh, hell no. SPYM. I can always tell a newbie when they get here. because they always ask for the same crap. And basically, in my humble opinion, that's exactly what they are. Yeah, I see you. We'll take a look at Verizon. And Williams, WMB. We'll take a look at that one too. All right, let's keep on going. Over here, who do we have? We have Nick, BDS, Super Looper, Quandarius, Len, Judy Woody. Okay. NPC, nice. Pete, how you doing, Pete? Keith, Joe Schmo. Thank you there, Joe Schmo. Nick Libner. Having success with your system. Way to go there, Mr. Nick. Nice here. SpaceX. At what price? SPCYX. SPCX. I don't know why the hell you want to look at SpaceX. Definitely a newbie question. It's okay. I'll take a look at it. You're not going to like what I have to say, but Cam, nice to see you. All right. Freight Lights. Fox on Talks. Wait a minute. Bricks and blocks and chicks and talks. Quick blocks talk. Quick tricks fleck. Okay, anyway. Jay Barlow, Cam, HPE. Brian, Dewey, Back Tees. Chris, Nick, John, Grady. Bless you, thank you there, Len. Kenneth. Love, Ziegler, Justice. Nice to see you there, Justice. Swag, how you doing? Twigs, top 5 recommendations. We're going to get to it a little bit. Robles fam, let's take a look at Hood. We'll take a gander at it. Sit tight. Susie, I see you there. Oh, Susie decided to bolt. Len, we'll take a look at that one. G. Kernan, what's going on? Danella. Andrew, Skeets. What's up? King Kong 11. Tech Bad Boys. Bubble Coat. Melamel 77. Carmo, what's going on? OKLO. I haven't looked at that one in a while. OKLO. Cam, got it. Elizabeth, got it. Tony White, nice to see you. I got your info from KCE. Whoa, Brian, nice to see you. Bling, duty, what's going on? All right. DJT. Sorry, dude, that's not a stock, but we'll take a gander at something else. Walmart. Yep, we're going to take a look at it in a bit. Okay, over here, what do we have? All right, Roman, will you go into more detail on weekly cash flow? Absolutely. Are we just looking at stocks that pay one out of one after another, or how do we get into the weekly dividend new to your account? Roman, thank you very much. Now, Roman, I'm just saying hi to everybody at the moment. We do have 13 different platforms that we're live streaming on. You're, I believe, on Instagram. Uh-oh. Thank you there, Rubbles. That was nice of you. Uh-oh. Sit tight. We'll be right there. So, that being said, everything's going to make sense as we progress through the evening. What we're looking for is a simple, safe, predictable, consistent 1% every single week. I don't know where you got the idea of weekly dividends. I did say dividend investing for weekly cash flow. Nowhere in there did I say weekly dividends. I said dividend investing for weekly cash flow. There's a difference between the two. All right, sit tight, you guys. Sugar Daddy's here. Okay, that being said, let's get the ball rolling. You guys are going to give me suggestions. I'm going to put them through and see if they work. Every single night we look for 5 quality companies. What you guys suggest. I'm just reading the numbers, and I'm telling you what I do to get my 1% every single week. All right, who else do we have? Kate, nice to see you. Joe T, everybody. CPR and K-View. Ooh, we'll take a look at those. One at a time, okay? Now, first we're going to start off with, how you doing, Ryan? First, we're going to start off with HPE, also known as Hewlett-Packard. All right, so when I pull up a chart, it's always the same thing. A, B, C, 1, 2, 3. I do the same thing over and over and over again. It's boring as hell. I don't know why you guys want to do this shit, but hey, here we go. You ready? Boring. Here it comes. What I look for, the 1-year chart. First and foremost, 5 things Take you 2 to 3 seconds. I know you don't believe me, but here we go. The top, the bottom. Where was it? Where is it? Where is it going? This is not right. All right. That's not right. Let's go all the way back. What are we missing here? Oh, that's what we're missing. Damn it, I changed my damn computer. Well, I did. All right. Day. 1 year, 1 day. There we go. There it is. How to end up with that stupid thing? Oh, that's the 200-day moving average. Damn it. I want to get that thing out of there too. Huh. All right, whatever. Let's do this. 5 things. You ready? 1, the high. 2, the bottom. 3, where was it a year ago? 4, where is it now? 5, where is the flow of the cash? Up, sideways, up, down, up. What's going on right there? Either like the company, you don't. Let's take a look at Hewlett Packard. So what's going on right here? The last 30 days. The last 30 days, Friday, Thursday, Wednesday, last week, gives us a good idea. Oh my goodness. Excuse me. Gives us a good idea of where's the stock going next. Well, where does it look like it's going? Right? Up, down, up. It looks like it's going up. Well, let's zoom in a little tighter, but before we do, if I'm going to do this trade here, how much money am I going to make off of it? To find that out, we're going to find out what the premium is. So if I buy it at $47.90, I'm going to sell it at $48. Because $47.90, the closest strike price is going to be the $48. And that's paying $180. Not quite 4%, but pretty close. So the questions you should be asking yourself, number 1, Clay, what's happening? Question number 1 is, does it make sense? A good quality company, never buy anything you do not want to hold long term. That's rule number 1. I got 5 simple rules and 5 criteria. We're going to go through all of them as the night progresses. But ask yourself the question, why would you invest anything? Why would you put your money into a company that is not consistently profitable year after year after year? And we're going to go through a few of them. I'm going to show you what I use. And I'm not going to charge anything. I'm not going to ask you at the end of the night, hey, is it okay if I send you? No, I'm not going to do that. Okay, we're just going to learn. That's it. Learn, educate, and entertain. That's it. Learn, educate, entertain. Let's do this. All right, so here's the movement. Okay, the 48 is going for 180, which is about 4%. Let's see if Hewlett Packard is a good deal. All right, covered call. Now, if you don't understand what a covered call is, we're going to buy the stock first, and then we're going to immediately sell it for the same price or as close to the same price in order to collect a profit and get back my money by the end of the week. I want to jump in on Friday. I'd like to be out on, jump in on Monday, tomorrow morning, and I'd like to be out by Friday with a profit. So let's see. We're going to do the 48. The 48's right there. There it is right there. Let's do one contract at 48. There we go. And there we go. This is what it should sound like. One covered call, HPE, which is Hewlett Packard. 7 August 26th. That means the option contract that I'm going to use is going to expire on Friday, 5 days away. 48 call option. 142 is my profit. I got to drop in 4,600. Now, I know it doesn't really mean anything at the moment, but in order to calculate what your rate of return is, we have to divide the profit by how much money I have into it. That will give me my rate of return. But here's something that a lot of people have a tendency to overlook or not take into consideration. Okay? I'm doing this for weekly cash flow. That means I want to get in Monday, get out Friday, and have a 1% return on my investment by Friday. So if I have $50,000, okay, I want at least $500 this week. If I get $10,000, I want at least $100 this week. And it's weekly, 52 times a year, weekly cash flow every single week. Okay, so Hewlett-Packard, there's the numbers. Let's get the calculator out and see if it's actually something we want to do. Oh, you got to be kidding me. There's the calculator. All right. First thing, the profit, 142. So we're going to take the 142, stick it into the calculator. 142, and we're going to divide it by the cost of the trade, including commissions and fees. Do you remember the part where I said simple, safe, predictable? Do you remember that part? Simple, safe, predictable, consistent. Well, the predictable part comes right here. I know what my trade is. I know what I'm doing because it tells me right there. My break even right there. Does it make sense? It either does or it doesn't. What's my maximum profit on this one trade? Well, there it is right there. Well, what is it costing me? Well, the cost of the trade, including commissions and fees, right there. It even gives me the number if this was a margin trade. If it was on margin, which I don't suggest people do margin until you really understand the risks involved. That's right there. So to find out my rate of return, I take this, divide it by that, and it gives me the grand total of, let's do this, 46.58. 46.58, grand total of 3%. Now think about that for a second. 3% rate of return for 5 days. It either makes sense or it doesn't. You either like the company or you don't. So do you like Hewlett-Packard? Do you like Hewlett-Packard at this current price? It's a question you need to ask yourself. Never buy anything. It's rule number one. I got 5 simple rules. Rule number 1 is never buy anything you do not want to hold on to long term. If you can't imagine holding it for the next 5, 10, 15, 20 years, you probably shouldn't be buying it in the first place. All right, so 3%. Yeah, I'm going to save this one. We find 5 every night. Hewlett-Packard, number 1. And getting pretty good at that one. All right, let's clean up the computer. And we'll look for number 2 every night. 5 decent companies that make sense. Either make sense or it just doesn't. Isn't that weird? H, P, E, Hewlett-Packard. There it is. 1 covered call, Hewlett-Packard, 7 August 26. That's this coming Friday, 5 days away. The 48 call option. 142 is the profit. 46.58 is the rate, is the investment, and it's a 3% rate of return. 3% for 1 week. Think about it. If 1% a week is 50% per year, what do you think 3% a week is going to be? Now, it's 5 or 10 minutes of your time. I hate to be the bearer of bad news, but nobody's just going to give you something for nothing. You actually have to do something. Well, you should spend 5 or 10 minutes every single day on your money, cultivating it, taking care of it, growing it, tending to it. All right, 3%. HPE. 3%. Next. There you go. Next, what do we got next? John Didier, $4,800, returns 1% a week, doubles your money in a year. Yeah, that sounds about right. All right, we have a couple more to take a look at. GLW, SPYM, blah, blah, blah. Tony White, SpaceX. Really? SPCEX. SPCX. It'll help if I actually have it right there. SPCX. SpaceX. Now, I'm not sure what you're finding so exciting about this thing. This thing's not even 2 months old yet. We're right here at 220. Now we're at 108. That's a 50% drop. Why are you getting excited about this? Here's the thing. There's no historical performance. We have no idea what to compare this to. It's only 2 months old. So I don't know why you're getting all excited. Because the high of the year was 2 months ago. The low of the year was last Tuesday. It ain't doing much better now. So why? Why are you getting excited about it? Let's keep on keeping on. The Gap is next. Interesting. Looks like the Gap ran out of speed. Let's go. Check it out. Hold on. Remember, 5 things. 5 things. It takes 2 to 3 seconds. 2 to 3 seconds. You ready? The high and the low. Where was it? Where is it? Up, down, up. That's it. That was 2 to 3 seconds. You take a look at it. You see the high. You see the low. You see where it was. You see where it is. And where is it going? It's that easy. Okay. So, currently, we're sitting at $20.09. Well, kind of makes sense if it's $20.09. Why not just do the 20s? Yeah, we're going to lose 9 cents. Big. No. Whoa. Time out. Look at this. 2050. So after hours, which is right about now, after hours, the 2050 is going for 24. That's over 1%. Let's do that one. Wait a second. Hold on. Hold up. I don't think we're going to do this one. Only because, look. 30-day high, 30-day bottom, up, down, just doesn't look right. Sorry, no to the Gap for this week. What else do we have? DTE. What the hell is DTE? DTE. That's a no. Who came up with DTE? That's a no. Wally World. WMT. Interesting. It looks like a no, though. Look at this. Up, down, up, down. How do I get that stupid thing off of there? That didn't help out. Didn't help out at all. Studies. That's much better. Thank you. Wanted that off of there. All right. So Walmart, it doesn't look quite right. Here's your top. Here's the bottom. Here's where it was. Here's where it is. Look. Up, down. It's actually coming back down. Let me zoom in. You'll be able to see it a little easier. Just looks like a no for today. Look at your last 30 days. Okay? She went up, 30-day high. She came down, 30-day bottom. Here's your retracement right there. And there's your pullback right there. Ideal. So as soon as she comes back down here, we'll put Walmart down for next week. Not this week, but next week. Because I want to give it a little bit more time for it to come back down, come up with a new bottom before she turns around. So next week it is for Wally World. Okay, for Wally World, what do we have next? Uh-oh. I don't remember who this was, but somebody wanted to take a look at Google, and I don't know why they want to take a look at Google. What do they have? 2.5 years of dividends? That's it. Well, alrighty then. That's a good reason right there. Did you see it? You saw it. Go ahead. You saw it right there. Top, the bottom. Where was it? Where is it? Look at this. Up, down, up. Well, right there. Let's zoom into that. That looks pretty damn good. Now, we talked about this a couple of weeks ago. Actually, no. Last week. Not last week. The week before. Not last week. This is last week right here. We talked about the week before. This right here. Google went up. Big drop right there. New bottom. Then she went up. Okay. This is where she is. Now, 356. What was the 356 looking like? 357 is going for 595. Okay, that works. Let's do the 360s, because the 360s right there. 40. Okay, 360s. Let's do this. 360s. Get rid of that. Covered call to the 360. There it is. One contract. There it is. Here we go. Wally World. What? Oh, no. Google. Ugh. Okay. One covered call Google. 7 August. That's this coming Friday, 5 days away. The 360 call option. 515 is the profit. 35,000 is the investment. It's a $300 stock. Actually, it's a $356 stock. So, yeah, it's going to be a bit pricey. But I'm interested in my rate of return. Now, don't get me wrong. I love Wally World. They got over 25 years of increased profits. They're called a dividend aristocrat because they're more than 25 years of consistently increasing their profits. That's just the way it is. Profit, 515. Divided by the investment. The investment on this one, 35.48. 35,485. Grand total of 1.4% for 5 days. 1.4. Now, it's not a contest to find out what is the highest rate of return. My contest with myself is consistency of profitability. They go up, they go down. So if I can grab 1.4% from Walmart, why not? All right. This is Google. Why do I keep calling Walmart? It's Google. Google's not on my list, but hey, someone likes Google enough to take a look at this thing. All right. That being said, and here we are, back to the beginning. Google. One covered call, Google, G-O-O-G, 7 August 26. The 360 call option. Here's the profit, 515. Here's the investment, 35,000. If and only, I say it every night, if and only if you actually like Google. It's not a recommendation. I don't make any recommendations except, don't stick your head out too far on the ride home. Might go home in another car. You know how that works. But here's the thing. Always check to make sure it makes sense for your situation. I don't give investing advice. I just point out what the calculators and the computers tell me. If I buy it for this price, which is the 360, whoops. All right, didn't want to do that. All right. And how much did this come to? 1.4. 1.4. 1.4. Next. What do we have next? All right. ITW, Illinois Toolworks. Well, ITW, Illinois Toolworks, is a dividend king. And if you don't know what a dividend king is, Dividend King has 5 decades of increased profits. 5 decades. That's 50 years of increased profits. If you like the company. All right. But here's the thing. Illinois Toolworks, August, September, November, December is a monthly, and I don't do monthly options. Weekly options only. Now, don't get me wrong. It's a great company, great positioning. Look at the movement. Great. Wonderful. But I don't trade monthly options because I can't get weekly cash flow from it. It's actually simple as that. I can't get weekly cash flow from something that trades on a monthly basis. Now, I look every single day. Okay, I look in the morning I have a private morning trading group, and then I look in the evening with you guys. Luna, thank you for that, Luna. That was very nice of you. Oh, Luna, that is so sweet. All right, so let's keep on going. What do we have down there? Correct. Thank you, then, Melvin. Dylan, quick question. Where can or how can I watch the show not inverted? Second, where do you go online to trade the actual stocks? Well, I use Thinkorswim, which is offered through Charles Schwab, charlesschwab.com, trading platform. Okay, but I use Thinkorswim. They bought that from TD Ameritrade, another trading platform. And where can you go where it's not inverted? YouTube. You're on the YouTube small channel. You go to the YouTube, the bigger channel, because the screen behind me right here, the screen here is live on YouTube at this moment. Okay, Dylan? All right. Next. GLW. Corning. GLW. There it is, Corning. Ooh, check that out. Who came up with this one? Here's the top. Here's the bottom. Here's where it was. Here's where it is. Look at the momentum. Up, down, up. Clear as day. The 138s. Actually, it's 142 now. The 142's 450. Okay. The last traded price, 138. After hours market, 142. That's where she is right here, right now, 142. Okay, so the 142s are going for 450. I could deal that. Buy it at 142.20, sell it for less than I paid for it, and still walk away with a profit. Now, I say that every once in a while, and I really don't think people understand that. Pete, nice to see you, Pete. I'm going to say it again slowly. I'm going to show you a trade. I'm going to go through all the motions. I'm going to show you. Coming from TikTok, how do I join the private meeting group? Ryan, how you doing today? Go back to TikTok, send me an email. DM me an email, or just go right to the website. The website's the10minutetrader.com. Now, I'm not trying to sell them anything. I'm not trying to sell anything, but that's where it is. The10minutetrader.com, right smack dab on the front page. Where was I? All right, Corning. I'm going to buy it at the price 142.39. Sell it at 142, which is less than I paid for it, and still walk away with a profit. That's kind of insane if you think about it. Buy something, sell it for less than you pay for it, and still walk away with a profit. Let's do this. See what it looks like. You ready? Let's zoom in. What do you think? Last 30 days. 30-day high, 30-day bottom, and a gap down. Look, and she's filling up, going back up. All right, that works for me. Let's do this one. Corning, number 2 for the evening. Let's get rid of this. Covered call. There it is. The 142s right there. Johnny, tell him what he's won. All right, Bill, what we got today? We got GLW. Corning. How did they come up with GLW for Corning? All right, Corning. Anyway, 7 August 26. That's this coming Friday, 5 days away. The 142 call option. Look, the current price is 142.28. 142.28, selling it for 142, walk away at 490. I got to put up 13. What is the rate of return? Well, let's take a gander at that. Calculator, if you please. 490 is the profit. The investment in order for me to get there. 13,710. 13,710. It comes to a grand total of 3.5%. 3.5 for 5 days. Let's keep on doing this. You ready? 3.5%. All right, it works. $3.5. Let's get rid of this crap. Bye-bye. Bye-bye. So long. Farewell. Here we go. Ready? Damn it. I didn't move it. There it is. Corning. Right there. One covered call, GLW. That is Corning. 7 August 26. That's this coming Friday, 5 days away. The 142 call option. Look at the current price. 142.26. So we're actually selling it for less than we're paying for it and still walking away with the profit. I think it was, what was it, 3.5% for 5 days? 490, 13, 3.5% for 5 days. $3.5% for 5 days. GLW. Corning. That was number 3. Come up with number 4. Who do we love? Who do you love? Who do you love? What do we got? What do we got? Let's take a look at some of these questions. What do we have here? What do we have for questions? Dino! Hey, James, I finally understand what the premium you're referring to means. Thank you, Dino. All right. Let's keep on keeping on. All right. What do we got? What do we got? All right, right here. Hey, Joshua, how you doing? How's it going, Elham? And John, how are you doing? Nice to see you guys. Kels wants to take a look at Ford. I like Ford. Let's see what it looks like. Ford. Not today, it don't. Sorry, Kels. Take a look. What happened Thursday, Friday? What happened last week? Look at that. Now, all right, you can look at the whole thing if you want. The top, the bottom, where was it? Where is it? Look at up, down, up, down, up, down. It's right there. Missed it. Last 30 days. Here's your 30-day bottom right there. 30-day top right there. Boom, boom, boom. It goes from 13 to 16. That's $3. $3 on a $13 stock is over 20%. It's a 20% jump. Of course there's going to be profit taking. And it's going to keep coming down until it's done. Let's put Ford down for next week. Give it a couple more days. Ford for next week. QXO. What the hell is QXO? QXO. What the hell is this? QXO Inc. Well, I'm definitely going to say no to this one. Well, number one, I have no idea who they are. I never invest in something I have no clue of. But look what's happening. Your top, your bottom, where was it? Where is it? Look, it's up, down, and it's still dropping. I mean, if you like it, okay, but what is it going to do? Okay, the 1345s, the 1350s. Okay, that's over 3%. But I'm not going to buy it as it's dropping. Look at the last 30 days. Look at this. See? Down, 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 down. No, not until it finds its bottom. Okay, what do we have next? Next. QXO. BKKR. No, is it BR? What is it? No, sorry. BRKR. All right, what is that? BRKR. Bruker Corporation. Hot tamale. No. Number one, I don't buy at the high, and I don't do monthly options. The only way you're going to get weekly cash flow for something that trades on a monthly basis is by looking at this crap all day long, and I ain't doing that. Sorry. Just a no. Hooked for life. Rodney, makes sense. Glad you like it. Uh-oh. Jazz. SanDisk, really? SNDK. Jazz, good luck to you, brother. I don't do stocks that are $1,200 a share. And it's coming down. Think about it, Jazz. Okay? It was at $2,400 a share a month ago. Now it's down to $1,000. Yeah, no thank you. I don't do big dollar stocks. I don't. I like to stay under $400. Load flow, dispatch, nice. Pirate 330, whatever. Swigs. Carrie, LB. Nice shorts. Larry, what are you looking at my shorts for? Look at the screen. Stop accumulating. Thank you, DJ. Tony. Cause and Nastra. What's happening, Cause? Beast mode. Get done. Nutrex. Ash. Aaron. So you're investing $48,000, so $4,800 for a $100 return. Okay, let me see if I get this correct. Nick, good evening. I think Halliburton and Hims will look good for. Oh, we'll take a look at those. Give me 1 second, Nick. I got to deal with what's his name? Aaron. Aaron. Okay, so Aaron seems to have an issue with making $100 off of a $4,800 investment. Where the hell did you get that number from? Okay, let me try this one more time. $100. $100 divide 4,800. That's 2%. No, Asher. No, not Asher. Aaron. Aaron, explain to me in a manner which I'll understand. Okay, remember, I didn't go to college, so I might not understand what you're saying. But a 2% return for 1 week, you don't like that idea. Can you explain to me why you don't like it? Because 2% a week comes to over 100% by the end of the year. This is not, one and done. It's like every single week. So if I'm investing $4,800 and I can get $100 every single week, dude, that's over $5,200 by the end of the year. That's more than 100% return. But, what do I know? Victor, nice to see you, Victor. All right, let's keep on going. Thank you there, John. Harmony, thank you there, Harmony. Aaron James, I'm very new to options and calls. What is the risk on that high risk, low reward? High risk. Wait a second. Let me read that again because it didn't sound quite right. Aaron, I am very new to options and calls. Okay. What is the risk on that? High risk, low reward? No. Low risk, low reward. It's like almost no risk. Think about it, Aaron. Okay, number one, only buying good quality companies. The kind of companies that you want to buy and hold for the rest of your life. Something you feel safe putting your money into. And once you find something safe putting your money into, you're going to sell someone the rights through a covered call or a call option to get a weekly return. We're not looking for just the dividends. We're looking for dividends, premiums, and capital growth. You have 1, 2, and 3. I don't care where the 1% comes from every week, as long as it's a consistent 1% every single week. Okay, hopefully that makes sense. Scott Huey, the Daily Man. Dino, I finally understand. You got it? All right. Shiitake, what's happening, Shiitake? Robles fam wants to take a look at Hood. Hood. Now, I can't say it's a yes or it's a no. But here's the thing. Here's what it looks like. The top, the bottom, where was it a year ago? Where is it now? Where's the flow? Up, down, up, down. Not quite finding the bottom yet. Let me zoom in and I'll show you. Here's your last 30 days. 30 days ago, we're here at 120. Then we dropped. Now we're here at 86. So it's dropping, dropping, dropping. I like to wait until it finds the bottom, bounces off, and starts going back up again. When it finds the bottom. Well, tomorrow it could be lower. So I don't want to buy it tomorrow. I want to buy it when she finds the bottom and then turns up. 2 days up to be specific. Then on the third day up, I will jump in. OKE. What the hell is that? OKE. Okie day. No. Who came up with that one? TDT Soyeti. All right. August, September, October. Those are months of the year. I don't do monthlies. They just don't work for me. Kels, we already looked at SpaceX. SpaceX is a what the hell were you thinking? 2 months, really? Uh-oh. George Peck wants to take a look at Eli Lilly. A little out of my price range, but it's coming down. Look at your last 30 days, George. Okay? 30 days ago, you're at 1,250. Okay? She went down, back up, then she dropped like a rock to 1,120. Well, I don't buy things as they're dropping. Wait for the bottom to show up. If you like Eli Lilly. Brokers, hell yeah. Jazz, you look like Tony Hawk. I hear that once a week. JD, nice to see you. Kenzo. Dixieland, energy transfer. I'm going to tell you no right now, and it's not what you think. The reason I don't like energy transfer, 0, 0, 0. I don't like a bunch of zeros. Because, see, as the stock drops, look. Down, up, down, up, down, up, down, up, down, up, down, up, down, up. Okay, so she's up now. Now she's going to come down. But as she's coming down, what am I collecting? Well, if I'm going to do a covered call, right, at the 2030, well, the 20's paying nicely. But look at the 2050 and the 21. Well, 5 cents, 0. Come on. Yeah, I need a halfway decent number on the premium to make it worthwhile. Jamin, how you doing today? Nice to see you, Jamin. And Infamous Bliss. Cool name, Infamous Bliss. Thoughts on the wheel method. Brandingo. I love the wheel method. I don't teach it here. I teach something a little easier than the wheel method. So Brandingo, when my 9-year-old daughter asked me to teach her how to invest. Seriously, she would, all right, hold on. I know someone doesn't believe me, so let's bring her up. Let's bring up the little princess. And we can also look at something else too. Videos. It's my what do you call it? My YouTube channel. The oldest videos. And there she is, the princess herself.
Hi, I'm Drake, and I used to be a part of that internet website company, which my dad didn't let me call that.
Internet club site web thing.
You're going to be getting weekly.
Okay, that's the little princess right there.
Stock trading, and every month you'll be getting.
And there's me. 15, 16 years ago. Now reason I show you that, if you could check out the date of that thing, like 13, 14, 15 years ago, that was a long time ago. To keep a 9-year-old entertained, we did a lot of crazy, weird stuff. And what we're standing in front of is what they actually have available now. A monthly calendar. Apples, what's happening? So, 15 to 16 years ago, my 9-year-old daughter says, Daddy, can you teach me? So teaching a 9-year-old is not the easiest thing in the world. And I definitely did not get into the wheel strategy, even though the wheel strategy is a great strategy. Okay? But for a 9-year-old, it had to be simple, safe, predictable, consistent, and no way for her to lose. So I had to come up with 5 rules that went along with it. Rule number 1 is never buy anything you do not want to hold on to long term. Rule 2, never sell at a loss. It defeats the purpose. Rule 3, make sure the company's consistently profitable. Rule 4, weekly options only. And then rule 5, make sure all the numbers work in your favor. Well, she was 9 years old. So although I like the wheel strategy, the cash secured puts first and then the covered call, great, wonderful. Try explaining that to a 9-year-old. It wasn't that easy. So I kept something simpler. Simpler. Now don't get me wrong, the wheel strategy is great, but the covered call is simpler and safer. So for a 9-year-old, simple and safe had to be. So no wheel strategy here. Sorry. Vansky the Frenchie. How you doing? G-Money, Mango, Gobin. Kels wants to take a look at Pepsi. Wait a second. Before we leave here, let's go someplace else while we're online. Let's go to FinViz. And we want to look at the stock screener because we check every single week, and every week they give us a new number. What's the number going to be this week? All right, this week, there it is right there, 11,517. Last week, it was 11,497. Well, this week, it's 11,517. Every week, they add more and more companies for you to invest in. Well, now you got 11,517 of them. I'm only looking at about 350. That's about it. Because I want companies that are consistently profitable, doing the same things year after year after year. I'm not looking for something new and interesting and flashy. All right, let's get out of that. Let's get out of that. Get out of that. Get out of that and get into this. Ha ha ha. Not that. Alrighty. Being a little fickle, ain't ya? All right, here we go. So no to energy transfer. Sorry. We don't need this anymore. $11,517. Ow, that's a lot. Pepsi. Orlando. We got some questions here. Oh, I got to grab a seat, get some questions. We're at 9. Holy cow, we're at 9:20 already. Wow. Isn't that crazy how 1 hour can just go by so quickly? It's Tiffany. How you doing there, Tiffany? Nice to see you. Down here, what do we have? Dividends get paid. Dividends are paid twice a year. Not necessarily. Can you see CPR and KView? CPR. It's not popping up. CPR is not popping up, but KView will. KVUE. KView. Okay. What do you want at KView? Now, KView is actually coming down at the moment. Look at the last couple of weeks. Okay. Top, bottom, back up, back down. She's actually coming down at the moment, so no to KView. Sorry. Dividends are paid twice yearly. No, they're not. Okay. You have some companies that pay once a year. You have some companies that pay twice a year. You got a whole bunch of companies paying every quarter or every 90 days, 4 times a year. And then you have companies paying every month. And now you have some that are paying once a week. So yeah, not just twice a year. Melvin, correct. Thank you there, Melvin. Dylan, quick question. Where can or how can I watch the show not invert? Yeah, we already did that question. Understood. Thinkorswim. Yep. I will check the other channel. All right. Coming from TikTok, did that one. You spoke on high speed. Why weekly options only? Let's just call it a personal preference. Because, Bull, I'm not sure about you, but I grew up in the 60s and 70s. I like getting paid every week. My lifestyle is geared around getting paid every week. So, yeah, it only makes sense to me to invest for weekly cash flow. Oh, I missed all these questions. Holy cow. There's nothing wrong with being beginners. Just sit back, chill. We'll get to all these questions. I try to answer every single question before the night is over. We're looking for 2 more. Here we go. Wheel strategy. We did that one. Mango, Gobin. Okay. Kel's, Pepsi. We'll take a look at that next. Tay. We'll take a look at Amazon. Sit tight for a second. The Cathaholic. Really? Cathaholic. Mystic Dragon wants to take a look at Halliburton. Okay. All right, so why weekly options only? Well, besides the fact that I like getting paid on a weekly basis, it's very challenging to see where a company is going to be in 30 days. It's challenging enough to find out where it's going to be in 5 days. So if I jump in on Monday, take a look at the chart we're looking at right now, okay? The high is 30 days ago. The low is 3 weeks ago. The retracement high was last week. Now it's slowly coming down. Okay. Well, the next 5 days, it looks like it will be here around 18, the low 18s. That's what it looks like. Where's it going to be in 30 days? I have no clue. So I don't try to do 30 days. I try to do weekly options and get paid weekly. I don't know how else to say it. Orlando, you can lose money if the stock option you sold doesn't protect you no more, and then you're stuck like Chuck for a long time if the stock takes a big hit. Not necessarily so. EJ, I see you over there. Nice to see you there, EJ. The one I'm looking at, okay, now, Orlando, you can lose money. And most beginners lose money by hitting the wrong button. That's number one. Hit the wrong button. That's where most people lose money, hitting the wrong button. I've done it myself. I've been trading for over 30 years, and yes, I hit the wrong button all the time. But back to your question. You can lose money if the stock option you sold doesn't protect you no more. Now, I'm not 100% sure what you mean by that, because I think you're looking at it in a different perspective than what I'm trying to portray to you. Okay? I'm looking at good quality companies that I'd like to buy and hold for the rest of my life. So the protection part is not really something I'm looking for. If I buy K-View, I'm buying it with the understanding that it has a high of the year, it has a low of the year, and it can go between those in an instant. I'm understanding that. But I'm also wanting to collect the dividend every 90 days if this company pays every 90 days. But, but what I'm also trying to do is to create weekly cash flow. So if I buy it, well, currently this one's at 1924, I'd most likely be selling the 1950s to pick up my 1%. If it goes up, yeah, they'll buy it from me at 1950. So I made, let's continue this. So if I buy it and it goes down, I'm okay with it going down because it's a company that I want to buy and own anyway. Okay, but I don't buy it as the stocks are dropping. I like to buy it at the bottom before she starts to go up. Because stocks only do two things. They go up and they go down. So it's on its way down now. So why don't I just sit and wait and jump in after it makes that turn? I could be waiting a long time. And you're right. If I don't pay attention to my options and I sell something and the stock goes the wrong way, yeah, I could lose. But here's the thing. Don't expect any mercy from me, because if you don't pay attention to your money, that is a you problem. It's your money. If you don't tend to it, if you don't keep an eye on it every single day, you cannot complain if you lose money. If you don't set alerts saying, hey, pay attention, something's going on here. An alert's not that difficult, especially with Thinkorswim. You just take the cursor, you right click, window opens up, create alert right there, down towards the bottom. Boom, there it is. What do I want me alert? Okay, I want the alert right there. Great, set it, forget it. Now, if it hits the alert, I'm going to get notified either an email, well, actually all three. I'll get an email, I'll get a text, and I'll get a notification on my trading platform. I look at my account twice a day, because at this point in my life, I have two choices, and only two. And don't think that you're someone special, because you're not. I'm sorry if your mom and dad say, well, you're special. No, you're not. You're just like everybody else. You're just a number on an account at the other end of the screen. Okay? Whoever is investing your money, and if it's not you, you got two choices. You do it, or give up accountability and let someone else do it for you. There's no other way around it. No one's coming to your rescue. Invest yourself, or give up accountability and let someone else do it for you. And there's nothing wrong with that. Okay, we're all different. We're all on a different path, and hopefully that makes sense. Got that, Bull? Okay. Can you take a look at Maine? Dylan, why do I want to take a look at Maine? M-A-I-N. Okay, so just for you, Mr. Dylan, I'm looking at Maine. Guess what? That's a no. I don't do monthly options. They just don't go my favors. It's just a waste of my time. You want to do them, you do them. I'm just giving you my opinion. No. I want weekly cash flow, not monthly. All right. I told you we'd look at Halliburton. Halliburton. Here we go. The high, the low. Let me get out of your way so you can see better. I'm in the way. All right. The high, the low. Where was it? Where is it? Look at this. Up, down. Look at that right there. There's the new bottom, and she's bouncing up. Let's zoom in so you can see it better. It's right there. Lovely, lovely. Okay. 30-day high, 30-day bottom. Up, down. She's definitely going up. But, yeah, I know, you don't like that but, here's the thing. We only have 1 day up. That's it, just one. So if she's up tomorrow, that would be 2 days up. Well, for me, I want 2 days up, but I will jump in on the third day. So the soonest I would jump into this one would be Tuesday. So we need another one. Need another one. Have we looked at American Express? Braid of the trade. We looked at American Express last week. Last Thursday, as a matter of fact. AXP. Okay. High, low. Where was it? Where is it? Up, down, up. What's going on right there? That's the part I want to see, because that was last week. That's going to lead us into this week. What can we expect this week? Well, last 30 days. What do you think? The top, the bottom, up, down. Now she's going up, 336. The 337s are going for 380. That's 1%. Big Robert. What's happening up, Big Robert? Nice to see you. All right, so American Express. Don't leave home without it. 337. There it is. This is what it should sound like. Something like this. You ready? One covered call, AXP, American Express. 7 August, that's this Friday, 5 days away. The 337.50 is right now, it's at 339. So if I sell it for less than I paid for, I can walk away at 421, put up 31,000. EPD. Why you don't trade futures? I did many years ago. They're not consistent, and no futures that I know of pays a dividend. All right. I'm going to save this one. We'll take a look at EPD in a second, Brader. Calculator. 421 is the profit. We're going to divide it by the investment. 33,329 comes to a grand total of 1.2. Okay, it's 1.25%. If you like it. American Express. Don't leave home without it. Okay, let's clean this up. Get rid of that. Get rid of that. Let's go back to this. Go to that. Here we go. AXP. One covered call, AXP. That's American Express. Don't leave home without it. 7 August. That's this coming Friday. The 337.50. 421 is the profit. 33,000 is the investment. Now, some people might think I'm investing in stocks. Well, you could look at it that way. I like to look at it creating weekly cash producing assets. Well, think about it. An asset is something that puts money in your pocket every week. Well, assets cost money. So, and the money's got to go somewhere. But think about it. You work every day. Okay, you go to school, go to college, get a job, work, 30, 40 years of your life. And out of that 30 or 40 years of your life, you put a little tiny bit aside every single week. Well, at some point, when you're retired, well, that little tiny bit every single week has now got to last me the rest of my days. So I don't have the luxury of making mistakes. Anyway, what did I say this one was? 1.2, 1.26. So it's 1.25. Okay, 1.25. 1.25, 1.25. Gotta love it. All right, American Express, that's one. There's two. There's three. There's four. Okay, four. We got one more to go. One more. Come on down. One more. One more. Halliburton, Pepsi, Amazon. Okay, we did Pepsi. Did we do Pepsi already? Let's take a look. Pepsi. Yeah, no to Pepsi. All right, Tay wants to take a look at Amazon. AMZN, Amazon. Hell no. Who came up with Amazon? Tay, really? Tay, did you see this right here? Did you see that big, huge gap up on Friday? What the hell are you thinking? Do you think it's going to do it again? No, doesn't do that. Catholic. Fiserv. I have no idea what that means. Mystic Dragon. We already did Halliburton. Bowser's. My bro. If you were doing 1% per week, you'd be richer than Elon Musk. That's not true. Seriously, it's not true. Okay? Number one, I have no desire to be that rich. Because that rich, you get those kind of problems. And I'm doing just fine. Don't worry about me. Okay, Catholic. You got to give me the ticker symbol. Dixieland, nice to see you. Patrick wants to take a look at Lululemon. Why? Why? Lululemon. All right. I got 100 shares of Meta and Microsoft. Should I write calls this week? Now, B, I can't tell you what to do. Okay? I mean, I could tell you what to do, but that would get both of us in trouble. I would definitely prefer not to do that. DJ, nice to see you. Mentor, how are you? All right, so Lululemon, top, bottom, where was it? Where is it? Look at this. Down, up, down, up. Okay, so the 118, we're at 120 going, that's over 2%. Well, let's take a look at Lululemon for those of you who like Lululemon. Why you don't trade futures? Because they're not as predictable as stocks and they don't pay dividends. Bull, USO, EPD. All right, hold. Sit tight. We're almost ready for a phone call. Let's do this last one right here. And we are going to take phone calls. I don't like that at all. And don't get me wrong, I was going to do it, but no, now that I got a better look. Okay? The high, the low, where was it? Where is it? Follow the bouncing ball. Are you ready? It's not that difficult. Follow the bouncing ball. Down, up, down, one day up. Yeah, no. That's not enough for me. Hi, I just joined. Can you please explain what's going on? DJ, how are you doing today? Sit tight for a second. All right, DJ. What we're looking to do, DJ, we're looking for a simple, safe, predictable, consistent way to collect 1% every single week using a strategy created for a 9-year-old little girl. My 9-year-old asked me in 2008, Daddy, can you teach me? So I had to come up with a strategy, simple, safe, predictable, consistent, and no way for her to lose. 5 simple rules, DJ. You ready? Never buy anything you don't want to hold on to long term. Never sell at a loss. Make sure the company's consistently profitable. Weekly options only. And then make sure all the numbers work. The strategy took less than 15 minutes to teach it to a 9-year-old. Now, the age parameters on all these channels are 18. So if you're over the age of 18, I would like to think that you could grasp onto something that took a 9-year-old 15 minutes. Okay? So that being said, OKLO, Nick. What's going on, Nick? OKLO. What is going on there, dude? 2 days up from the very bottom of the year. Wow. Take a look. Okay, if you like OKOL, here it is. The high of the year, the low of the year. Where was it a year ago? Where is it now? Up, down, up. Definitely can see it. Let's zoom in so you can really see it. The last 30 days, there it is. 30-day high, 30-day bottom. 1, 2 days up, right there. Down, bouncing up. Is it going to keep going up? We won't know until tomorrow and Tuesday. But if we were going to do OKLO, it would look something like this, 39.56 to 39.50s. One covered call. Here it is. You ready? Uh-oh, we got a couple people here. Don't steal my pannier? That right? Pannier. Okay. DJ, nice to see you. Got it. Romero, nice to see you. All right. Here we go. OKLO. One covered call. 7 August, which is this coming Friday, 5 days away. The 39.50. Look at this. 39.56 is the current price. 39.50. 220 is the profit. 3,700. That's it. Just 3,700. What does that come to? 220 is the profit. Divided by 37.30 gives me a grand total. 5.8? Nice. 5.8. OKLO. Nice. All right, we're going to open the phone calls. 1 second. And there we go. Alrighty, that being said, let's get this out of here. Let's get this out of here. Let's get rid of that. Go back to this. Go back to this. And here we go. O-K-L-O. And there you have it. Now that's weird. I'm not even touching it, and it's moving on its own. All right, try it one more time. There we go. One covered call, OKLO, 7 August 26th to $39.50. The current price is $39.50 at this moment in time. 220 is the profit for one contract. One contract's $3,700, and one contract is paying 5.8. $5.8. There we go. All right, that's all 5. Let's open up the phone calls. Open up for phone calls. You ready? Who wants to go first? Well, let's try it one more time. Oh wow. 727 543 9418 9418. Phone lines are open for those who wants to call in. What else do we got? We got more questions. More questions. Can you do Altria? ALK. What the hell is ALK? All right, we already did Walmart. Oh, wow. Okay, hold on. Trying to reconnect. Joined. Don't. Pittsburgh, Kansas. Come on down. Hello.
Hello.
And how are you today?
I'm beautiful. How are you, brother?
I'm wonderful. Who am I speaking with?
This is John Didier.
John, how you doing?
I'm doing great.
Outstanding. What can I help you with there, John?
I have a question on how you're calculating your return on investment there when you're looking at that 1%.
Okay.
Whatever number
What's
you're coming up with.
What's the question?
Well, let me run a scenario by you. You're taking your premium and subtracting it from the cost of the stock, saying that's your total investment. Then you're taking the profit and dividing it by that number to come up with a percentage.
Okay, is this the part where I interject and tell you you're wrong?
Okay. Well,
let's walk through one. Let's walk through one real quick.
Pull up HPE.
HPE, Hewlett Packard.
First one you did today.
Hewlett Packard. Here we go. Hewlett Packard.
You got it up on the board. I mean, that was your first pick.
Yep,
Of the day.
I got it.
Okay.
All right, so Hewlett Packard. If we're looking at
Right.
Hewlett Packard, right now it's at $47.90.
Right.
Okay, hold on. Let me get rid of this. I got to clean this up a little bit. All right, now if it's at $47.90, it would make sense to do the 48 calls, correct?
Correct.
All right, what's the 48 call going for? 180, correct?
Correct.
All right, so we get the calculator out. If my profit is $1.80 per share, how much is each share costing me?
$47.90.
Okay, so we take the profit, divide it by the investment, $1.80 per share. divided by $47 and $0.90. Yeah, $47.90 comes to a grand total of 3.7%.
Okay.
Now, is that right or is that wrong?
That is correct, but look at the number that you posted when you used on your first save.
3. I put up 3.
Okay. You see, you're using that cost of trade plus fees
Yeah.
number there. What is that there?
Oh, wait a minute. 48 right there. There it is. All right.
46.58.
Oh, wait a second. I got to change this back. Change this back. All right. Buy one covered call, HPE. That's Hewlett Packard. 7 August 26. That's going to expire this coming Friday. The $48 call option. You got to remember one thing, John. See this number here? The bid and the ask? Yeah, that's changing every 2 or 3 seconds because the aftermarket hours is open now. So that number is going to, this number here, the profit's going to change every time I do it. Okay?
But you're going to use this number down here, which is what now? Right now?
160 by 4,600. Okay, do the 160.
By 4,600, what's the price of the stock right now?
It's, at this moment in time, it's 48.59.
Okay, so how do you have a cost of 4,600 there?
Because when I did it 15 or 20 minutes ago, that's the number that popped up.
Okay. Well, that number that's popping up is the cost of the stock minus the premium.
No, it's cost of the trade, including commissions and fees.
Okay.
Now, the premium doesn't get thrown in there until we look at, sorry, we're buying at 48, right now it's 48.59, and we're selling the 48s. So we got to take the 59 cents, subtract it from whatever that premium was, because you don't get that. Okay, because we're losing 59 cents per share.
Right.
Because we're buying at 48.59.
Right.
All right, so let's go back for a second. Let's get out of there. So let's get out of here. Back to single. Okay, now this number is going to keep changing. So if I do it now, I'm going to get a different number. It's 48.59. If I sell it at 48, I'm going to pick, well, I'm going to do the 48.50s now because now it's at 48.59.
Okay, pull up a call right now.
Okay, hold on.
Okay.
Single covered call, the 48.50. There it is, right there. Here we go. All right. One covered call, HPE, 7 August 26. That's this coming Friday. The 48.50 call option, because now it's at 48.59. Went up again. 187 is the profit. 4,600 is the investment. Well, what's that rate of return? Every time we do it, it's
No,
going to...
wait. What's the total investment there that it says 46?
46.63.
It's a 48.50 stock.
Yeah.
Okay, then it's subtracted the premium from the price of the stock there.
Well, no. It subtracted the 59 cents from it. 48 in the profit, and that's what we're getting. This is what we're putting in. 46.63. 46 not including possible dividend risk. So why the hell does it say, well, it's saying right here, HPE. Oh, yeah. Okay, yep, I see what you're talking about. That's the covered call. Now, the 46.63, because they're taking the dividend, not the dividend, they're taking the premium out.
Yes, and that's what you're using to calculate your percentage.
All right, all right. Hold on. Let's do
You
it.
see what I'm saying?
Yep, I see what you're saying. Let's change this for 1 second. Let's do single.
I'll make it real simple for you.
Yeah.
Okay, follow this. I have a car,
Yeah.
and it's $100 car,
Yeah.
and I'm going to sell you this $100 car to you for $100.
Uh-huh.
Okay, immediately your neighbor comes over, and he says, I'll give you $10 if I can buy that car off of you Friday for $100.
Yeah.
Okay. So you say, well, sure, that's like a covered call. So you take his $10. He comes Friday. He buys the car for $100, right?
Yep.
You started off with $100 on Monday.
Yeah.
You buy that $100 car, and Friday you have $110 in your pocket.
Correct.
You made 10%.
Correct.
If you use the numbers the way you're using them, the cost of the trade was $90 because you bought the car for $100 and you immediately got a premium for $10. The cost of the trade is $90 on the covered call.
Okay. Let's see if we can, John. Let's see if we can do it this way. Yeah.
You're taking your $10 profit, dividing it by the 90, which was your total investment. And you're coming up with 11%.
I hear you. Let's do it this way.
You know what I'm saying?
Yep, I hear what you're saying. Okay.
And
So wait a minute. I hear what you're saying. So let's go this way. We're picking up $180 for a contract, $1.80. Okay, and we're buying the stock for $48.59.
Right.
Divide $48.59 comes to a grand total of 3.7%.
Right.
I wrote down 3%. Because the numbers changed a little bit.
But if you do a call right now, if you use your numbers the way you're using them, and it says that cost of trade, that for that 48.59 stock, it's going to say the cost of the trade was like 46 something.
Yeah.
Well, that's the wrong number to use to calculate that percentage on your return.
Okay. What do we come up with?
I don't know. Pull it up.
All right. That's what we're doing.
Pull it up.
Right there. If we do the limit order, let's get rid of the limit order. Let's do a market order.
There it is, right there, right in front of you.
Hold on.
See where it said cost of trade?
Where?
Well, you had just pulled it up, but that's okay. Pull one up. Do 100 shares of some stock, and then do the covered call.
Okay. There we go. 100 shares of HPE at the market, 46.66. That's just, well, that's the covered. No, I don't want the covered. I just want the shares. Just the shares. There we go. 100 shares at the market. There we go. There we go. 48.31. Is that right?
I don't know what.
Well, it says right here. Buy 100 shares
what's your price?
HPE. Yeah, buy 100 shares HPE at the market to open 4,831. Is that correct?
Okay. 4,831.
Okay.
But what the number that you're using down there is the
4,831.
cost of the trade.
Okay, hold on. Let's get rid of this. Now, delete that. Go back to here. Single, and we buy it at $38.59. We sell it at $48.50. We pick up $155. So that's what it's costing us, and we're at a profit $155 per share, which is $155, right?
Correct.
Okay, so we take $155 divided by 48.31. 48.31 comes to a grand total of 3.2%. The number's going to keep changing. Every time we do this, we're going to get a different number. So this one says 3.2%. And what did I write down?
You had like 3 originally.
I put down 3. Yep.
Because it's changed. But you're using, if you use that cost, see that cost of trade there?
Yep.
Right there.
Yeah, I see it.
46.58.
Yeah, because they take the premium off of there already. Yeah, I know that, but when you're doing the math, that's what it
But
comes
when
out
you
to.
do the math to calculate the return, you can't use that number. You have to use the cost of what you paid for the 100 shares.
Correct.
That number's already, you're using that 46.58 number, which is subtracted the premium out of it already.
That's true. But
Yeah, you
it
need to add
doesn't.
the premium back in and then put the premium of your return.
You're correct.
Okay.
But then again,
I
wait a
thought
minute, see,
maybe I was missing something.
no, not really. But then again, think of it this way. Every time we do it, we're going to come up with a different number. If you're sitting right next to me, and we both hit the button at the exact same time, they're both going to be different numbers. You'd think they'd be the same, but they're not.
Right.
But it's always going to be different. Is 3 close to what we're talking about? It's actually 3.5, wasn't it?
Right. Yes, sir. But, on some of these, when you're looking at 1.1%, well, you could really easily slip into 0.8%.
True. But
Yeah.
as you're doing it,
Yes.
as you're buying the stock and as it's getting filled, the numbers are always going to consistently change while the market is open.
Yes. That was another question I had to segue into another thing. I was looking at Ford 2 weeks ago.
Uh-huh.
And I had a certain number that I could make money on doing a covered call if the price was, within this range.
Okay.
Pre-market, the price was shooting up and up and up. Pre-market trading Monday morning,
Uh-huh.
and I was like, "Well, there goes all my profit. It's disappearing right before my eyes."
Yeah. That happens sometimes.
Right, but then the market maker on the open, if I had put in money to buy, put in an order to buy at the market open,
Uh-huh.
he's got all the buys and sells. He knows what he's doing. He kind of totally ignored this pre-market action, and he pegged the opening price of that stock way down, back into profit land. And the market open kind of ignored the pre-market action, and the price was way down.
Okay.
So I was back in profit.
Okay.
Now, while all this was going on, I really don't have a beat. The option prices never moved.
Okay.
And I'm thinking the same thing can happen there. When you go to place your order to sell the option, well, the bid and asks are constantly changing.
Correct.
So it's like if I do this to, buy at the market open, I can get shaved. It could go either way. I can get shaved a few pennies here or there on the market open.
Correct.
Then when I immediately turn around to do the covered call, I can get shaved a few pennies on what I'm going to actually receive in the premium.
Correct.
So when you get shaved a few pennies, getting the stock and a few pennies, your 1% could disappear.
That's true, it can. But remember rule number 1? Never buy anything you don't want to hold long term. So regardless of what the price is, you want to buy it anyway. So look at it this way. Anytime I buy something, all right? Now we know that the numbers constantly change over and over and over and over again.
Yeah.
I hear you. All right.
Yeah.
So as soon as I hit the ask button, okay, that's the price right there, $14.74. And when I hit the confirm and send button, there's my price right there, $14.75. So if I want to sell a covered call and get my 1%, I just paid $14.75 for that, correct?
Do you actually? Because you have to.
Wait a minute.
You have to have a buyer. You have to have a buyer. Can't the market move?
Yes, it can. But am I buying it at a market order or am I buying it at a limit order? And once you buy it, it's yours, whatever price it is.
That's my question. Should I be doing limit orders on this?
Well, when you buy, all right. When I buy market order. Give it to me now. When I know it, it's filled at. Same thing right here. Okay. If I hit this button here, ask, hit there, boom. That's the price I'm paying. $14.74. Now I'm filled at $14.74. I want 1%. What's 1% of $14.74? 14.74.
Yeah, right.
Wait a minute, 1% of $1,474 is $14.74.
Correct.
Okay, you're just moving the decimal point over 2 places.
Yeah.
All right, so when I go to sell an option, back to the options, single options right there, get rid of that, 14.74 right there. I said the 14.50, that's going to be the closest. I'm going to sell that one right there. Okay, one contract, there it is. And how much do I want? I want 14 cents. 14.74. Okay, yeah, which is 15 cents. Right now, market makers offer me 36 cents.
Right.
1%, wait a minute, 1% is 15 cents. Market makers offering me 36.
Right.
Which is over 2%.
Yeah. So you're playing with a wide enough margin that if it gets shaved a few pennies, you're still hitting your target.
Exactly. I'm at that point in my life, if I'm getting 1% or more, I don't really worry about the pennies here and there. But you are absolutely correct. You can sit in front of your computer and spend more time pinching those numbers and getting them exact the way you want them to be. Well, great. For a 9-year-old, it wasn't that way at all. Well, this is what I'm buying. This is what I'm selling. Does it look right? Does it sound right? Does everything go together? Yeah, great. Let's go. Let's do it. As long as it's over 1%, I really don't care.
Right. Right. I was just looking at if there was a trade that was right at 1%, I'm gambling that things don't move against me, and when I click the button, I might not be getting that 1%.
That is true. That's all part of the game. That's like every time you roll the dice. You know, four green houses, 1 red hotel, round, you go, stay away from go to jail and collect $200.
Yeah.
Every time you pick up that dice and roll it, there's always a chance you can end up in jail.
Yeah.
It's all part of the game.
I'm looking at, maybe I should be looking at trades that just return like 1.5%. So if I do get shaved a few pennies, I'm still above 1.
Well, I've been doing this so long, I have never, ever, ever had everything bring in the exact same amount every week. Some make 1%, some make 0.5%, some make 3%, some make 5%. I think the most I ever got in 1 week was 11% for a covered call. That was crazy. But there's always going to be a different number. By the time you add them all up together, so what if I got 0.25% off of Riley because Riley dropped? So what? I brought in something. Every position I have, I want something coming in. And as long as it's 1% or more, I really don't worry about the minor details.
All right, that's fine. And I think it is wise to just do the market orders, because if you start messing around with limit orders, you might have bought a stock and your covered call doesn't get filled.
That's true.
Yeah.
That's true. I always tell people, when I buy, I always buy at the market. But when I'm selling, I always use a limit order. Because that way I'm always guaranteed more than 1%. Because if I just say market order, the market maker might give me less than 1%.
Right. So when you say you're selling, you mean you do a limit order on the option?
Correct. I buy the stock at the market. When I sell the option, I sell it with a limit order. And then I will take a look at what the market maker is offering. If the market maker is offering a different price, I will lower or increase my premium that I want before he fills mine.
All right. That's clear. Very clear.
All right. You got it, John?
Thank you, sir.
Have a great day.
Yes. Bye-bye.
Bye. Anybody else want to call in before I call it a night? Silver Semiconductors, can you have a look at AXTI? What the hell is AXTI? AXTI. There we go. No, don't get me wrong. I don't know anything about the company, but I do know how to read a chart. Okay? Here's the high. Here's the low. We were at $1 a year ago. Okay? There's no way on God's green earth you're going to get me to believe that a stock that was $1 a year ago has 20 years, 2 decades of increased profits. Sorry, I ain't going to believe it. It went from $1, jumped all the way up to 140, and you want me to believe that it's been profitable for 2 decades? No, not even going to waste my time with that one. Soulful Stride, AbbVie. I love AbbVie. Uh-oh, I got noise over here. Who the hell's calling that number? Hello?
Hey, Tim, how you doing?
I'm wonderful. Who's this?
I'm from Lansing, Michigan.
Okay.
So I have a question.
Sure.
Can you do two, for example, on HPE?
Yeah.
I've done last week. I've done one covered call that has not expired yet. It's going to expire August 7th. And then tonight I did another cover call on the same stock that will expire on the 14th. So my question is, can you do 2 covered calls on one stock?
Wait a second. How many shares do you own?
Only 100.
No, you cannot. Because what's going to happen is you have 100 shares. You sold one option for those 100 shares to expire this Friday.
But what if that doesn't fail?
Well, in that case, then you can sell the ones for next week. You can't sell both of them. Because what happens if somebody who bought the ones for this week decides, hey, I want those 100 shares. And what about the guy who you sold it for next week? And he says, I want those 100 shares. You only have 100. You can't sell 200 shares if you don't have 200 shares. So that means one of them will be covered, the other one will be naked. And a naked call, you got to be approved for that. That's level 3 or higher. Which I wouldn't suggest anyone doing unless you're really good at it.
Right, you can't say it's already sold on the second one. You can't tell if it's sold.
Well, no, it's not going to be sold now anyway because the market's not open. That order that you put in for tonight, that won't fill until tomorrow morning. And unless you're approved for it, it will just get canceled.
Oh. Okay.
Yeah.
All right. That makes sense. I was just wondering if that's an option or not.
No, it is an option. But do you really want to sell something you don't own? Because what happens if somebody wants to buy it from you?
Yeah, then I don't have it.
Exactly. That's what's called naked selling.
Okay.
All righty?
Okay. Well, thanks for clearing that up for me. You have a great night.
All right. You have a good night, too. All right. We're past 10 o'clock. We're just going to see what kind of questions we have before we call it a night. David, nice to see you here.
Nice to see you. Hey, James, I joined your club morning thing.
Yeah.
When's the Sunday email come out usually for tomorrow morning?
I got to wrap things up here in about 5 to 10 minutes, and then usually spend about a half hour, so you should be getting in about 30, 40 minutes.
Thank you very much, man. Appreciate it.
You're welcome. Have yourself a great day. So, Mr. Nick, I'm going to do hymns, and that's going to be it for the day. Hymns is what it is. Hymns. HIMS. What do you think, Mr. Nick? All right. Interesting. Take a look at your last 30 days, Nick. Your 30-day high, 39, 30-day bottom, 24. Now we have 2 days up. Okay. But I'd wait one more day. That being said, let's call it a day. EPD, we'll do that one tomorrow. USO tomorrow. MXL tomorrow. PFE tomorrow. Verizon tomorrow. Wow, all these guys will do. All right, Orlando. Sorry, dude. Tomorrow. Iran, Aflac. Wow, Tesla. Okay. Where can I pay for your services? Ryan, you're on TikTok. top left-hand corner. Just follow the bouncing ball. Seriously, Ryan, top left-hand corner. There's a little spot there that says The 10-Minute Trader. Just click on that and we'll walk you right through. Joe Schmo, we'll take a look at those tomorrow. All righty. Which stock just went over? I don't know which one that one was. Sorry about that. Justice, how you doing? I own this stock. It's dropped pretty hard. Oh, no. All righty. What other questions do we have? Orlando. I didn't know there was a stock called Blind. Soulful Stride, AbbVie, tomorrow. Osman, what's the price of XRP? XRP is not a dividend stock. Captain Conundrum. Thank you, Captain Conundrum. Became the number 1 fan. Oh, number 20 fan in the fan club. Cool. ED, Mr. B. How does liquidity work? Do you smoke at your age? Of course I do. I have a whole bunch of bad habits. Love watching your progress. Thank you, Killam. Nana, nice to see you. Leonordra. Killam, I learned investing from you. Cool. Well, investing is easy. Yep. I'm a lion, I'm lying. Okay. Bless you. Thank you there, Brian. Papa G, what's poppin'? Nice. The bottom of a daily time or an hourly time frame. Daily. Okay. Yeah, I'm not an hourly trader. I jump in the morning. I take a look at what happened yesterday. Not the last 15, 20 minutes, not the last hour. It's one day at a time. I'm on Webull. Okay. If they lose money, it's their fault. Exactly. Keep an eye on your money. Keep looking at it every day. Do you have Robinhood? VTI. We'll take a look at VTI tomorrow. The Qs. No, but we'll take a look at it tomorrow. 0-day contracts. Nope. VTI tomorrow. Brian, Pepsi, how do I start? You just keep showing up, keep asking questions, or you can go right to the website. You're on TikTok. Top left-hand corner. Click there, walk your way through right to the website. No, I don't do 0-day contracts. No, I don't do that. Pull up my pants. Alan, don't be, what's the matter with you? Eli, you do any fundamental analysis and know that these companies actually do or just draw lines on charts? Eli, thank you for that. Let's take a look at one, Eli. Eli, if I'm looking at certain companies, now you're misunderstanding what I do. Because when people ask me to take a look at the companies, I'll tell you whether or not I know them. And when I say I have no idea who this company is or what they do, and I go through the motions, well, that's exactly what that means. But for what I do, Eli, I stick to the Dividend Kings. In the Dividend Kings, I don't really do the fundamentals on the Dividend Kings. Number one, you cannot be a Dividend King unless you're successfully profitable for 5 decades, which means you have to have a certain amount of market cap. You have to have a certain amount of income coming in on a consistent basis. You have to have a certain amount of shares in float. So everything that you're talking about fundamentally, well, yeah, that's already done as a Dividend King, a Dividend Aristocrat, a Dividend Champion, a Dividend Contender. Anything that's not on those 4 lists, well, yeah, it's a whole different set of fundamentals I got to do on it. Never knew that learned something that quick. Yeah. XRP, not a dividend stock. But anyway, Eli, hope that made sense. Thoughts on VTI tomorrow. SPY tomorrow. Meta tomorrow. Eli Lilly, we already looked at that one. IWM? No idea. Thoughts on Micron? No, I don't do anything that high. SPY? Hell no. SPY is not consistently profitable. With that being 37, how much volume can you do in a week with this strategy? Oh. Interesting question. Take a look at HIMS for a second. 12,585,000. I really don't think my 200 or 300 shares is going to make a big difference when they're sharing 12 million shares. Okay? OKLO. OKLO. 8.8 million shares. I really don't think my 400 or 500 shares is going to make a difference with that one. Has negative earnings per share, no dividends, OKLOs, no go for me. I agree with you, but here's the thing. I didn't say it was my stock. I just said somebody wanted me to take a look at it. Those are what the numbers look like. If it has a negative earnings, no thank you. And if it has no dividends, again, no thank you. But I don't question what you guys do. You guys ask me to take a look at something. I'll take a look at it and give you my opinion. Okay, very rarely will you hear me say, oh, I like that. I'm going to do that one tomorrow. Say, I didn't say that at all tonight, did I? Jake, how you doing? Uh-oh. Jake, do you have courses? Yes. Asking as someone who has never invested outside index funds via 401k or Roth. Oh, dude, you got to keep showing up. Keep showing up, keep asking questions, and see if it makes sense. Before you spend any money, just make sure it makes sense. Okay. 2, dude, I kind of like your videos, not because there is anything smart here. Okay, thank you. Not because there's anything smart here, but maybe because how you do this. Anyway, contact me and we will mirror your picture. This drives me crazy. Dude, I've been doing this for many, many years. And so many people mention about the inverted screen on YouTube. If you know a way to invert the screen on YouTube using a selfie camera on an iPhone, I'll be more than glad to hear it. Okay? What else we got? How do you pick the strike on a cash secured put? It's always going to be a numbers game. Yeah. Yep, Eric, I agree with you. Yes, no, breakdown. Okay, works. Yeah, to contact me, I will help. I have no idea how to contact you because I would need your email address. Okay, and there's no way, I don't know, is there a way for me to do that? No, there isn't. I'm looking, there's no way for me to send you an email. Sorry, there's no way for me to send you an email. All right, let's keep on keeping on. He hears you, John. Thank you, Phil. Got that one. Semantics. Thank you, Castle Trading. Not sure it matters. No, it doesn't. James, you are so patient. Thank you so much for teaching us. Okay, you're welcome. He is right, not correct percent. Yeah, all right. So I wrote 3%. The actual percentage is 3.5. What's the big deal? At some point, is 3% still good? Yeah. What is it? Wekiolda. We're splitting pennies now. I don't even bother with them. If it's over 1%, I really honestly don't care. Right? 3%, 3.5, it's all the same to me. It's over 1. That's all that matters for me. See, now you guys got to figure out what works best for you. Okay? So he was absolutely 100% correct. Okay? It was off. But here's the thing. As soon as the market opens, every single one of these numbers, all of them, every single number is constantly going to change. Every 2 seconds, those numbers are going to change. So by the time, by the time you do the math and you hit the button to send in your order, guess what? The numbers are incorrect. So you're taking a snapshot. It's kind of like, do you remember the part on that movie? Wait. Star Trek with Pine. Scott Pine. Was that his name? Scott Pine. So, well, you got to do that. It's kind of like throwing a dart at a dartboard that's on a moving train while you're blindfolded on a horse. Okay? Kind of like the same thing. The numbers are going to constantly change, but the arithmetic, the mathematical equation is correct. What is the profit? You take the profit and you divide it by what your investment is. Whatever your investment is, you divide the profit. And that gives you your weekly cash flow, your weekly rate of return. If it's 1%, great, hit the send button. If it's not 1%, don't hit the send button. But don't quibble over the pennies, because at some point, okay, I could sit in front of my computer, cross all the T's, dot all the I's, go over the punctuation 5, 6, 7, 8, 9 times. Great, wonderful. Now I'm trading my time for pennies. I just want my 1% or more, and I want to go about my day. You guys have to figure out what makes sense to you. If you want to sit in front of your computer and get every single penny out of it, great. You do that if it works for you. We're all on a separate journey. I'm just showing you the strategy and I'm showing you the math. I'm showing you how to do it. Are the numbers going to be exact? No, they're never going to be exact. Because, like I said earlier, we can have 4 of us, 1, 2, 3, 4, all hitting the button at the exact same time. And there's a very, very high percentage that we will get filled at different numbers. Okay? We're on different journeys. Doesn't matter. I could be right next to you. We could do the exact same thing. But we won't get filled at the exact same price. I won't sell mine for the same price you sell yours for, unless we do limit orders. This is what I want. I'm not going to take any more. But if you do a market order, it's going to get filled at whatever it's going to get filled at. You got to be okay with that. It's part of the game, just like Monopoly. 4 greenhouses, 1 red hotel, round and round you go. Try to stay away from go to jail. You know, try to invest in the right properties. It's all a game. Learn the rules. Yeah, we're splitting pennies now. I hear you. Let's keep on going. Yeah, yep. Keith, thank you. Time for a commercial. Thank you, Brian. Not really. Thank you, Mike. Brian, pinned comment. Thank you. Shaved. All right. I only do limit orders. That kind of makes sense. How's the CP ratio? Don't even worry about that. Yo, good evening to you, too. All right. AbbVie, we'll take a look at it tomorrow. What is the minimum investment needed to do this? There is no minimum investment. My grandson started out with $50. How do we start the process of learning from you? Keep showing up or go right to the email address. Okay. Every single one of the platforms that you're on, whatever platform you're on, there's 13 of them. We're broadcasting on 13 different platforms. Wherever you are, there is, contact in the bio. Go there, just send me an email. Drop me your phone number and I will call you. Personally, me. I'm not going to pass you off to someone else. I will call you personally. Okay, if you have a question. Now, if you think you're having a conversation with me, WhatsApp, Telegram, Telechart, Snapchat, Twitter, whatever. No, I don't do that. I'm an old dude. I got gray hair. I don't do that. If you think you're having a conversation with me and you don't pick up the phone and hear my voice at the other end of the phone, you are not talking to me. Be careful. There's a lot of people out there trying to scam you out of your money. Okay? Make the right decision. Don't listen to some bonehead on the computer. Yep, talking about myself too. You want to have a conversation? Fine. Pick up the phone. I'll have a conversation with you. All right. Just finished washing Headstown. What did you all find for tonight so far? Thank you there, Miss Laurie. How do we start? Okay, just DM me your number. How much do I need to lose before I make anything? I prefer you lose nothing. All right. Always thought on wash sales. Any thoughts on wash sales? Yeah, try not to do them. Look up magnet, please. You got to give me the ticker symbol. We'll do that tomorrow. What's the symbol? Brian, thank you for that one. Maria, how are you? I think we're done. That's it. There's no more questions. No more questions. So if I didn't get to the stock you wanted to look at tonight, tune back in tomorrow. We'll take a look at it tomorrow. You got it. Have a great night, everyone. Now we're going to go to my mood music to get on out of here. There it is. There it is.
It was a gift. I resented it for 3 weeks. Then I filled the bowl with water, dropped the grapes in, and I wasn't ready for that. I watched my daughter eat half a bowl of grapes this morning before I used it. Just rinse them under.
You dream in stars and dive into the deep, fixing the world while I rest asleep. Your heart set on give, no matter the strain, building your legacy through love every day. Jewels and fire in your soul, the kind that's broken. You reach the skies on fires, and your dreams are futures God always. That's love everything you learn as the eye keeps the daylight blinking. Every day's a quest, lots of disguise, with dreams in the storm. The dreams never times. Retired, you say, with wicked and grin, but the broadcast has